Hello, everybody. Welcome to the Trading with Ashley channel. I've been so busy traveling all weekend, but it was for a very important reason. We had our very first Trading with Ashley community meet and greet, and it filled my heart with so much joy to actually come face to face with these wonderful people that I trade with every day. And the whole reason I started my own community was I couldn't find exactly what I was looking for in a community. I wanted a community that was free of a bunch of infighting. I wanted a community that we were all rowing the same way, where I had very smart individuals, very kind individuals come together, where we all help each other, just make the most we can of these crazy markets. And after meeting everybody face to face, it confirmed everything that I had ever dreamed of. I've got the nicest, kindest, smartest community members. So just so excited, and I'm looking forward to other meet and greets for those that weren't able to join us. But it doesn't happen by accident. I personally work very hard alongside my coaches and everybody else in our community to ensure that we have the best trading environment for students to learn and, most importantly, make a lot of money. So if you're ever interested in being a part of that community, book a brief call. We have to personally interview everybody because I want to definitely make sure that it is a fit, because we've created the most incredible culture, and I want to make sure that everyone that joins us, that it's going to be somebody that's going to be with us for the long haul. So for those of you that came here to hear all about what's happening this week, it is going to be jam-packed. So this video is full of information. We are going to look at several different things to help you prepare for the trading week. First and foremost, we're going to look at the Fear and Greed Index. That's an important index that I use to determine where the markets are. Then I want us to look at the VIX. Okay, that's the volatility. That helps us if we're going to be trading options. We're going to look at some critical levels for the SPY and QQQ so that you can be prepared for that. And then, most importantly, let's look at the biggest stock that everybody is watching this week, and that's Palantir. I have 3 trade setups for you to consider. One, if you already have shares and you want to sell covered calls, but you don't want those shares called away, think I found a good strike price for you. And for those of you that actually want more exposure to Palantir and you don't have enough shares, I have a strike price for you to consider to sell puts. And then for those of you that may not have large accounts and you're interested in just riding that volatility, I have a trade for you that we're going to look at. Now, for those of you that have heard about my $25,000 challenge and you want to be a part of it, well, I can promise you one thing. We are going to be busy this week. We made so much money last week kicking off the challenge. And it's great because $25,000 is a good amount to get started with, because you can usually work with a couple of really good stocks to sell options on. And I will be looking for more setups this week so that we can increase the amount of money that we've already made. Really excited about this challenge, and it's really changing lives. It's got a really wonderfully handwritten note. Who does handwritten notes anymore? But got a wonderful handwritten note from somebody that's just starting the challenge. She's already made over $850. So happy about this. All right, let's go into the computer, and I'm going to share with you everything you need to get ready for this week. First, I want to take a look at the Fear and Greed Index. Now, there's so many different things to use if you're a trader to watch the markets and try to decide whether you buy or sell. This is one of my favorites because it seems to be very consistent. And so the way that this works is if we're in extreme fear, then that's typically when you buy stocks. And it's really difficult to do that. But when we had everything pull down so dramatically on April 7th, I was actually very excited to go ahead and load up on some key stocks, particularly the QQQ, okay, the NASDAQ. And then if we go to extreme greed, or when we're in extreme greed, that's when you start cashing up and you get ready to deploy more cash when we get back down to extreme fear. Now, what happens when you're in the middle? Anything from fear to greed, and neutral, of course, they're in the middle. We're almost in neutral now. To me, this is actually the easiest quadrants to trade when we're in fear, neutral, or greed, because you can sell cash-secured puts pretty low and usually be okay. You can have the stock and start selling covered calls and usually be okay with that too. And so it's usually when you're in the extreme versions of each of these that you have to address your portfolio, but you can trade pretty fluidly in the middle. Next, let's take a peek at the VIX. It's the volatility index, and currently we're at 22.4. That's how we ended Friday. And that's actually a good sign. As we get closer to 20 and under 20, that's when the stock market's kind of calm down enough to where you can do some solid trading and everyone's not quite as fearful. Now, for those of you that were playing the volatility with me with a lot of trades, we made some incredible premiums over the last couple of weeks because we really use this volatility to our advantage. But keep in mind, anytime we're below 20, we can still get some really good trades in. They're usually pretty safe, and it's elevated enough if we're between 15 and 20 that we can still get some really good plays. So this is going to be a great week for selling options. And for those of you that are in my community, we have a lot of trading that I perceive that is going to take place, which is going to be great for our $25,000 challenge that we're working on. Next, I want to take a look at some key levels on the market in general, the SPY, and the NASDAQ. So you can see right here, the 200-day moving average is right there at 573. So we are very close to that. Now, everyone's watching it, and they want to know, will we have enough ammo, enough steam to push through this and allow the 200-day average to be support, or will this act as resistance and push it back down? And so we're just going to have to watch and see. And if we do get some wonderful trade deal announced with China this week, or if on Wednesday, Jerome Powell decides to cut rates by surprise, that could be the ammo that we need to push through that 200-day moving average. If not, it may serve as resistance, and that is really to be expected. We have had almost 2 solid weeks of the market going up, so we are due for some type of pullback. And so if we do have that this week, don't let it alarm you. It's the normal market cycles. And if we do have a lot of money come off the sidelines because we get really good news, that could be everything we need to push beyond that. And then we could start trading the range back above the 200-day moving average. Now, a quick look at the NASDAQ shows something very similar. Your 200 days right here at 491. We're sitting at 488. This is a lot of the stocks that I like to trade are in the NASDAQ, so I'm watching this closely. I was actually put some shares of the Qs here recently, and they appreciated overnight. We had a gap up overnight, and so I woke up to a lot of money, which is very exciting if you're ever running the wheel strategy on the Qs. Let's take a look at the lineup this week. So Monday, May 5th, we had the PMI data, and then on Wednesday, we have the Fed decision. That is going to be very important on Wednesday, and all eyes will be on that. On Thursday, we have jobless claims and productivity, and then on Friday, we have the global inflation and jobs. But I can guarantee you what most of you are here are for is Palantir and Palantir's earnings that are going to be after the market close on Monday. So next, I am going to take you through 3 trade ideas if you have the shares, if you don't have the shares and you want them, and if you don't have either and you just want to play the volatility. I'm going to give you 3 different setups for you to consider. Now, Palantir has been on a heater, and let's take a look at the technicals. The technicals are 72 on the RSI, and we are trading at the top of the Bollinger Band. I'm looking at the 3-month band. But I must make sure that you're aware that when we have a large event like earnings, technicals don't hold as much weight. So keep that in mind. So let's go look at the expected move with Palantir, and then I will build some trades around it for you. So based on the puts and calls, it appears that the expected move is up or down around 14%, give or take. So based on where we're trading now at about 124.56 at close of day on Friday, that would put Palantir pushing upwards to around 142, 143. And if it pushes down, it would more than likely go to around 106, 105. So that's good to know because now I'm able to build some trades around these price points to try to keep your trades as safe as possible. Now, if you're like me and you have nursed Palantir shares up from when they were a lot less expensive, you have a lot of value built up in your account. Now, my Palantir shares are in Roth IRAs and IRAs, so I'm not as worried about taxes. But if you are, you could be sitting on sizable gains. So if you're going to be selling covered calls on your shares. You want to go super high out of the money. I look at it as you're just trying to get a little pocket change out of having these shares versus providing enough money to pay for a week's worth of groceries, okay? So that's what I would consider. Now, my position size is rather large. It's over $500,000, currently sitting at $621,000. And of that, the gain in this is the unrealized gain is $483,000. So obviously, if I'm going to sell covered calls, I want to try to retain my shares if I'm in a taxable account, which I'm not, but I'm going to show you what potential strike prices that you can look at. Now, there's no guarantee it won't hit these strike prices by the end of the week that I'm going to give you, but it lessens the chance of early assignment. And if you do get into what I call trouble, it gets too close to your strike price, you have an opportunity to roll up and out further as long as you don't go too far out in time. So with that spirit in mind, let's look at some potential plays. Based on this situation, I would not consider going out more than a week. So that would be on May the 9th for a covered call. So looking at my different options, remember that the expected move gets us to about 142, but I don't want to get anywhere close to that. I want to be much higher than that just for a measure of safety. If you look at the deltas right here, 0.25 still gives it, that's a 25% chance that it could hit here, and I don't want it to be anywhere close to that. Of course, you would be compensated for that. If you're running the wheel strategy and you're open to having your shares called away, then you'd be paid handsomely for this because this is $3 a share. So that's nice to know. But I want to go even higher if I have shares that I don't want to get called away and I just want extra money. So don't laugh at me, but look here. I think 165 is going to be probably a safer bet right here. The delta is super low. It's, less than 10%. So you're looking at 0.072. Now, I'll only get 68 cents a share, but that's pretty nice. For every 100 shares I have, I'll be paid $68. And I know some of you out there are like me and you have thousands of shares, which this would serve you really well for a nice little pocket change per se. That would be something that you could just get as lagniappe. And honestly, if we do get this high to 165 and your shares are called away, you would more than likely be able to regain those in short order because there's going to be a lot of profit takers if it hits these levels, because this is life changing for some individuals. So keep that in mind. Now, if you're on the other end of the equation and you want to sell puts and you're trying to pick up this stock, I would look right here at 105. Now, the delta's low enough to be considered safe. It's 0.15, but remember, you can't count on these quite as much during earnings. But you would be paid $2.20 a share to make this particular bet. And so if you wanted to do that, the expected move gets you to about 106, but you could go really close to it at 105, and then that's going to pay you $220 for every $10,000, $500 you're putting up to make this trade. Now, if you want to do like I like to do sometimes and go further out for safety, let's look at an expiration date that's a little bit further out and it allows you to go even lower. Let's take a look at June the 20th. Because that would be one where the volatility is still high enough over earnings to give you, quite a bit of money for it. Now, if you're going to go out that far, why don't we look at something closer to right here about 95? So this one you'd have to put up $9,500, and it's right under 100. So if Palantir goes back below 100, it will more than likely start to get bought up again as long as everything stays really bullish about the stock. This one will pay you $340 per contract, so $3.40 a share. And here again, we're still in a safe delta. If you want to be a little bit more aggressive, you could, of course, go higher and get more premium. Like, let's see right here. If you went with 105 in June, then for this, you'd actually be getting Palantir for lower than 100 because it's paying you $572 to take this trade. So there's quite a variety of options out there for those of you that are wanting to get in on the Palantir game. Now, I promised a trade for those of you that just want to play the volatility. Okay, let's look at something in August. This is going to be what's called a put credit spread, and we do not expect that Palantir is going to get this low, obviously, or we would not be putting this trade on because this will not require near the capital if you were just selling a put on Palantir. For this, I'm going to go well below the expected move. I'm going to go with 85. The delta is below the point where I like it. When I do these, I like to have a delta below 0.15, and this one's 0.13. So the opening part of my trade is going to be the 85 strike. This is going to be the sold put. For this trade, I'm going to get $4.70 a share. That's great. But I'm going to make this trade $10 wide, meaning I'm going down to the 75 and I'm going to buy this put. And for that, I'm going to pay $2.95. Now let's talk about how this trade works. In case you're not fully aware of how a put credit spread works, I'm selling this put saying I'm willing to buy Palantir at $85 a share. But by buying this put at 75, if I happen to get assigned the shares for any reason, it's going to allow me to sell those same shares for 75. Doing this only requires me to have $1,000 in my account to make the trade, because there's your 85 minus 75 equals 10. 10 times 100 is 1,000. So if I were going to put this trade on, let's send it to a ticket and see how much I will get for putting up $1,000 to make the trade. Now, when you're setting this up, you're going to do net credit because you are selling one that's higher priced than the one you're buying. So it's net credit. And then let's go ahead and put, this is going to be very volatile tomorrow. So I'm going to put in something a little bit higher than the midpoint at this point. I'm going to go ahead and put in 180, and I'm going to see if that will fill. So let's preview it. For this trade, I would be receiving $180, and it would require $1,000. The reason it says $820 down here is because of the fact that I'm getting this credit right here. If you did this particular trade, your return on capital annualized would be over 50%. So it'd be about 54%, which is rather nice. Now, you could increase that if you're interested by widening the spread. And you could also go even further out, but it would tie up your money a little bit longer. So you can play with the figures to get to what you consider the sweet spot. But I would, for me personally, only open up this trade going with like an $85 strike. All right, now you're ready for the week. I hope you're well rested and you're ready to trade tomorrow and it all works out for you this week. I will be with you all week sharing different trade setups, different videos. So make sure you press subscribe if you haven't already, because you do not want to miss one. It's really sad when I see people watching old videos and commenting, oh, I wish I would have seen this one. It would have been a great trade. So make sure you press subscribe so that you don't miss not one trade. Remember, if you're with me trading with Ashley, there is no trader left behind. Now, if you want to watch another video that I picked out for you, especially if you love selling options, well, that video is right here.